That is a realistic 2022 price target. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a company called FuboTV, stock ticker FUBO. For those of you familiar with the channel, we have covered this company before. I did a video just 3 or 4 weeks ago on this company. I want to do an update because they are coming into earnings next week. FUBO is a small cap, high growth stock. That is one of the main things we cover on this channel. If that's content that you enjoy, please subscribe to the channel and hit the notification bell. And if you enjoy this video, please do us a favor and smash the like button. And of course, feel free to leave a comment below. So let's talk about FuboTV. They're currently trading at $10.31. So that is off of their 52-week low, but they did just hit their 52-week low recently. When we get to the chart, we'll take a look at that. When I had made my last video, they were trading somewhere in the $12 range, north of $12, and that at that time, that was their 52-week low. So since then, they've gone all the way down. If you look down here to the 52-week range, they got down to $8.74 intraday one day. That's their 52-week low. You can also see this stock's been as high as $47, and when you look at the chart, you'll see it was even higher than that. So this stock is very, very beaten down. And like I said, they're going into earnings next week. So they are going to report earnings after the bell on Wednesday. So that's just a little over 1 week from the time I'm making this video. So the reason I wanted to do a video on this is FUBO is very near its 52-week low, and you're going to see it's very much below the normal trading range for FUBO, in my opinion. They've got earnings next week, and they did something unusual. They gave us a big heads up on what earnings were going to look like. And basically what they told us is earnings are going to be very good. Let's take a quick look at an article that summarizes the sneak peek at earnings, and we'll talk about what to expect. Okay, this article was written by the Motley Fool, and it was based on the press release that FuboTV had given on their fourth quarter earnings results. Okay, so let me just jump to the part that matters here. Why FuboTV stock jumped last week? Okay, so they had a little pop on this, and subsequent to this, they hit their 52-week low. So they got no bounce off of this. This is not built into the stock price at this point because the stock price is lower right now than it was after this article came out and after their press release came out. So despite the fact that they kind of clued us in that they had a very good quarter, and I believe they give good guidance, their stock has gone down even further, and it was already thoroughly beaten down at the time. So in the preliminary announcement on Monday, FuboTV management said they now expect revenue will land in the $215 million to $220 million range, a full $10 million above the previous forecast, and that's about $10 million above analysts' expectations. So what's more, it now projects its subscriber count will exceed 1.1 million. That's 40,000 more than the low end of the range it was guiding for 2 months ago. So they've increased their target for subscribers. They have already announced that they've gone over 1 million subscribers. In the fourth quarter, we continued to deliver triple-digit revenue growth alongside operating leverage through the efficient deployment of acquisition spend and the retention of high-quality customer cohorts. So the Motley Fool then goes on to point out the fact that there's something missing. Management left out a key detail. So all of this that they talked about was very good news. And ultimately, this subscriber base is critical. There was something notably missing from FuboTV's preliminary Q4 report. The company did not provide any profit or loss figures. In Q3, it lost $105 million on the bottom line, while generating revenue of $157 million. Those massive losses are concerning. There's still some question as to whether or not FuboTV's business model can eventually reach a profitable scale. So that is the Motley Fool's opinion. I don't share that opinion. And obviously, you guys can form your own opinion as to future potential profitability. But even FUBO themselves does not expect to be profitable for the next several years. However, this is an early stage, small cap, ultra high growth company. So profitability really isn't on the list at this point. More so on the list is cash flow. And we'll talk about that because cash flow is a concern. So if we take a look at analyst estimates, for this quarter here, they're now adjusted to an average of 213.6 million, and we know that they're going to report between 215 and 220 million, so they will beat that. On the year, $620 million. That represents 185% growth year over year from 2021 to 2020. Their 2020 sales were $217 million. So 185% growth obviously is a very good foundation here. However, they expect to continue to grow at not quite that fast, but still at a very rapid pace for several years. Their 2022 estimated earnings is $1.09 billion. That represents almost a 75% growth. And their 2023 and 2024 estimates are still at about 50%. The compound annual growth rate here is massive. It's well over 50% in that 4 or 5 year window. For me, this qualifies as an ultra high growth stock. So that's the good news. The bad news is they're losing money and they expect that trend to continue for now. So analysts think they're going to lose about $2.62 per share this year, and then another $2.27 per share next year. Let's take a look at how many shares they have and try and figure out what this means. Shares outstanding 160 million. So that means in 2022, they're expecting to lose maybe $350 million on the year. So that's a lot of money. If we look down here at their cash balances, their cash was $393 million. They're planning on losing more money than they have in cash. Their operating cash flow for the trailing 12 months was negative $219 million. So they have a very small cash runway. So one of the things that's going to happen with this company is they are going to have to raise money either through debt or equity, because even their own plan says that they will run out of money before they become profitable. However, that is the case with many small cap high growth stocks. So the question is, how much capital do they need to raise? And are they doing the other things necessary that investors would be willing to invest the additional capital? So again, in my opinion, the answer to that is yes. I believe the first thing they'll do is raise a couple $100 million, maybe $200 million. They have $393 million, plus the $200 million should give them a couple of years worth of runway. They will not have to dilute themselves that much in order to do that. Let's assume they're diluting themselves 10% to get $200 million. When we look at the stock, you're going to see the stock has been beaten down so much more than that, that 10 or even 15% dilution really is not meaningful, in my opinion, when you look at the stock price going forward. So let's go do that. Let's look at the chart. Okay, this is their chart over the last 14 or 15 months. So you'll see this has been all over the place. This blue line right here dates back to the middle of November 2020. This line of support held all of the year 2021. You can see we tested it on May 11th and it held, and then somewhere around the middle of January, it broke below this line. This last push down brought it to its all-time low, and you'll see it is off of its all-time low. I'm going to zoom in for a minute, because when I made my last video, this stock was trading around here. I added this red line, and you guys can go take a look at the last video if you want to see the discussion that we had. I added this red line and said, listen, the potential downside is we may go down to about $8.59. Well, you can see we practically touched this line over the course of the next 10 days after I said that. This line of support held, so that was important. To me, when I do my red lines of support usually mean I believe that's the bottom, that is the potential downside. So in this instance, we were right on the money. It bounced off of that line, but we're still very near its 52-week low. So there's a blue line here at $35, and there's another one here at just a little under $25. So what I want to point out is on November 4th, this stock was trading at about $35. It's now trading at around $10. So there's been, in my opinion, no material change in the company, in its business model, in its forecasts. You can see it actually beat its fourth quarter projections. Yes, they're going to need to raise capital, but everybody already knew that a long time ago. So there's really no fundamental changes. Their subscriber base is way up. They've exceeded expectations on that. We'll find out how much net income they made, and I'm sure they lost money, which they expected to do. And even if they ended up losing a few pennies more than expected, to me, that is the last parameter that we usually look at in an early stage high growth company. So that's not really the number anybody focuses on. So when I look at price targets, we know that last January and February, things kind of spiraled out of control for some of these small cap stocks, and they reached numbers that were maybe overinflated. But I'm ignoring all of this. I'm looking at this price range right here. From June 1st all the way until the middle of November, this stock traded comfortably between $25 and $35. That to me feels like its natural range. It then spent a while going from $25 down to about $15, and now it's cascaded under that. So for me, in my opinion, this stock is exceptionally oversold. If I measure from its high over a year ago to where it's trading right now, it's down 82.5%. But even if I just measure from this $35 line, this stock is now down still over 70%. Even since $25, this stock is down 60%. So to me, the bottom of this normal trading range, the stock is 60% down from. So I'm just going to show a couple of potential price targets in my opinion. And please remember, none of this is financial advice. This is how I'm interpreting this stock. I am bullish on this company, but you guys have to do your own due diligence and decide if this is a company that you think is worth investing in. I want to show just a couple of target points. So the first thing is just to get back to this original line of support that lasted the entire year of 2021. That would be a 35% increase in the stock. So with good earnings, I don't see why it wouldn't pop back up above this line, which was really a very, very low bar. If they could just get back to the bottom of this trading range from 25 to 35, that represents a 145% increase on this stock. So to me, that is a realistic 2022 price target. We've had nothing but good news from FUBO. We do know that they need to raise money, but we've known that all along. I don't think it will be a massive dilution. I think it will be a small dilution. And again, a 10 or 15% dilution does not counterbalance the fact that this stock needs to go up 145% just to get back to what I consider the low end of its trading range. So again, this is not financial advice. You guys have to make a decision. I'm looking at 3 different ways to play this. Their earnings are next week. So one way would be to dollar cost average in before earnings. If for some reason the stock reacts negatively to earnings, then I could continue to dollar cost average in after that, knowing in my opinion, the downside is not too much. The other way that I'm looking at this is potentially just buying some options ahead of earnings so that I don't miss out if we get a pop on earnings. And then if we don't, and for some reason the stock has a negative reaction to earnings, to me, that would be the ultimate buying potential. If the stock did turn around and continue to go lower, I would view that as an excellent buying opportunity from my own perspective. Again, not financial advice. Please be very careful with this stock. As you can see, it has been extra volatile. And this is a small cap, super high growth company, so the volatility is huge. So please be careful. Good luck investing, and we will see you in the next video.